All right, I'm Ty Bradley. I want to talk about investing in stocks. But first, I got to ask you if you have any stocks of your own. Anyone?
No.
Have you ever had stocks? All right, so you might learn some stuff today. It is never a bad idea to invest in some sort of way, and investing in stocks is one type of investment opportunity. And I've been buying and selling stocks since the age of 10 because my grandparents got me stocks for my birthday. I've been into it ever since. And I'll talk today about the benefits of investing compared to a regular savings account. And I'm going to teach you how to set up a TD Ameritrade account, which is an investment account, so you can start investing yourself. You guys have like debit cards or savings account?
Yes.
All right, sounds good. That's good. So I'm going to start off by telling you a little bit about the stock market, just the basics. The stock market is where investors connect to buy and sell investments, most commonly stocks, which are shares of ownership in a company. Um, the most common thing is a stock. That is said by O'Shea in 2020. There are many companies out there in the stock market, and you probably know a few. And by purchasing a stock, you're a part owner in the company. So that's kind of cool. Some examples are Apple, Google, Tesla, Amazon, Walmart. You've probably heard of all those. You definitely have. And there's smaller ones that you may have not heard of. So here's an example of the stock market and how people make money. If someone bought one Apple stock 5 years ago today, it was priced at $28.30. And if they sold it today, if they kept it throughout those 5 years, they'd have a profit of about $94, which is pretty big for just buying one stock. So imagine if someone bought 28 or 100 stocks of Apple at $28 today, if they sold, their profit would be about $9,400 according to Google in 2020. So as a whole, the stock market gradually increases a certain percentage each year. So chances are, if you invest correctly, you'll make some money. But some stocks skyrocket past that percentage and others can fail. So there's some risk in it. It isn't, you're not automatically making money just because you invest. So, what stocks should you invest in? You should, as beginners, or since you don't have stocks yet, you should invest in familiar, solid stocks that you know, such as, say, Walmart or whatever. And these companies should be trusted by you and everyone and have a good reputation. So probably the brand names that you know, like Google, is probably trusted, stuff like that, instead of random stocks that you wouldn't really know about. And an example of a stable stock would be McCormick. It's a spice company, and this is stable because no matter where the economy is at, people still buy spice, so their price gradually goes up as time goes on. There are some risks though in the stock market. Some may not do so well. Some may go up 1,000% in a year. Who knows? Why would you invest in the stock market? Perhaps the most popular reason why people invest in companies is to uh, earn a return on their investments, also known as a profit, which is said by Masters in 2017. Year by year, the stock market as a whole goes up in value. And by holding stocks long term, chances are your money will increase. A fact about the stock market: over the last 140 years, the 10-year stock market returns have averaged 9.2%. That means every 10 years they see the average go up 9.2%. So that's pretty good. And that was said by Nuven in 2020. So could investing in stocks be an effective retirement strategy? So you all have savings accounts, like you said, right? And you got money in there. And you know that there's a certain percentage of interest that you gain, right, in a savings account. But that percentage is usually less than 1%. So that isn't very much money. And like I said, the average stock market in the last 140 years is 9.2%. So that is about an 8% difference between the two, according to Best High Yield 2020. And 8% may not seem like a lot, but 8% of $1 million is $80,000. So in the end, that's a lot of money. And people could invest in stocks as a retirement strategy to start saving up money for retirement. And there are many ways to invest in stocks. You could buy a part of a company and have it sit in your account for a long time and then cash out like 20 years later. Or you could go month by month. It just is up to you. There's a lot of different ways. You could do day trading, which is usually a little bit riskier, but people have made big bucks off of that. And but as someone with not a lot of experience, you should be careful and patient, not jump into risky business, and really research the stock before you buy it. There's plenty of reliable websites out there that really explain to you if stocks are good or not, and if you should invest in them. Another reason to invest is dividends. Companies and investors win with dividends because investors get paid quarterly for having the stock, and companies use dividends so the stocks for a long amount of time of the company. Um, how can you invest? I would suggest TD Ameritrade. TD Ameritrade is probably one of the best online brokers out there because it's reliable, trusted, and TD Ameritrade has no commissions fees, which means there are no fees for buying or selling stocks, according to Benzinga 2019. And I use TD Ameritrade because personally I think it is the best around, and I suggest you start with TD Ameritrade. By investing today, continuing this practice throughout your life, you will be doing yourself a favor. This type of investment would be considered passive income. And passive income, for those of you who don't know, is money you earn in a way that requires little to no daily effort. So you could buy stocks, have it sit in your account, and not check it for however long as you want. So you could be making money without even doing anything, according to Hogan 2020. And if you think about it, you're putting money away for a certain period of time, however short or long you want. And by doing this, you can make money by having no daily effort. And it's good to start investing early because you'll learn more and more about it. And the earlier you invest, probably the more money you'll have to retire with. In conclusion, I would encourage you all to start saving up money and just putting a portion of your money into your savings account into the stock market. So even if you have like $30 a month or something like that to put into the stock market, that's a great start. And you can really get the feel, and maybe you can make some cash too. So you've learned a little bit about the stock market during this presentation. If this sparked any interest in you whatsoever, I would go to YouTube. I've learned a lot about the stock market on YouTube. That's pretty much where I've learned most of it, in between that and my grandparents. And yeah, that's about it. But YouTube is a great help. there's a lot of people there that are really out there for the right cause and wanting to help you invest. So the stock market in the end beats out the savings account because on average it's about 8% better, but you could do way better than 8% or you could break even. That's the risk. So all of you should create a TD Ameritrade account today. And if you're interested in that, you should let me know because I'll help you out. And you can buy a piece of a company that you like, such as Amazon. And you don't have to be wealthy to start this process. You can put in any amount of money and just get a feel for it. And if you like it, you can continue to grow with it. And that's all. Hope you learned a bit about stocks and how to invest. Thank you.
I have a question.
Yeah.
So, you said that you have stocks from your grandparents. Is it like a specific type or?
Yeah, so I have a lot more than like what my grandparents got me from. My grandparents got me one McDonald's stock when I was 10, and that was like $90 in 2010, right? Or 2009, I think. And now it's at like $210. So it jumped up a bit. So, and then I don't know, I have stock in some other companies. I don't know if you know them, like some pharmaceutical companies, some like it's like Tesla, but it's a company in China called Neo. I don't know if you've heard of that. It's like the up and coming Tesla in
Yeah.
Asia, so and some others. So yeah, it's pretty cool. I like to, get up, research a lot about it, read the articles of what to do, and then kind of just play around and see if I can, make some money or whatever. But
Is like the amount that you get from it, is that dependent on the economy or is it like the company?
I guess so. So each stock has its own, price and chart. So here, I'll show you real quick. You have the stock app on your phone, right?
Yeah, I think so.
Do you have your phone with you?
Yeah.
So we can go, you can just type in Apple, AAPL, and
Okay.
you see that?
I've never opened it, so I have to go hit continue.
Okay, yeah.
Apple, okay.
Yeah, and then there's charts daily, weekly, monthly, whatnot, and it shows you the price. And well, the goal is to buy low and sell high. So if you would have bought Apple 2 years ago, it was about $38. You see that?
Yeah.
And now it's at like 123. So I don't know. You see what I mean? Like if you buy it at then it like one stock goes up, so your money goes from 140 to 120. I don't know if I answered that great,
Yeah,
but
yeah, you did.
and then there's so the Dow Jones. You probably have that on your app, right? Do you see that?
Oh yeah.
That's like the average of all the big stocks, pretty much. That's what you look at. And if that's doing good, the probably stocks are doing good that day. But if the Dow is down, that pretty much is the economy, I guess.
Okay.
Yeah.
Interesting.
There's a lot of YouTube videos that explain it perfectly. So
Yeah.
like 5 minutes. So yeah, good
I have a
question.
quick question.
Yeah.
Are you comfortable sharing with how much money you've made so far for
How
having
much money I've
worked many
made?
years? Yeah.
I've made a little bit of money. I I don't have too much money in there, right? So I mean, personally, I don't know anyone that says like it's a bad idea to invest.
Mm-hmm.
You just got to be safe. And the more I learn about it and the more like I read this stuff on how to kind of beat out the stock market, like beat out the 8% and get a better percentage, like the more I make.
Mm-hmm.
So, I mean, I've made a little bit of money, but I don't have a ton of money in there. So it's not like a crazy amount.
Mm-hmm.
So,
Nice.
yeah.
It's a start for sure.
Yeah, so one thing I've read that's very beneficial. Do you guys have jobs?
Yes.
You all have jobs. Nice. So, this was on like wealth.com or something. A third of, or say you get your, what is it, your paycheck for the month, a third of that should go into your expenses, right? A third of it should go into investing, and a third of it should go into your savings account. So I don't know, that's just a good idea.
Yeah.
That's how you get wealthier, I guess. Because you aren't making money if you get your paycheck and you spend it all on expenses. So then you're just living paycheck to paycheck. The more you put into savings and investment, the wealthier you get, chances are. So you guys think you're gonna open an account?
I think I'm gonna have to.
Mhm.
All right.
Yeah.
I mean, even if there's like games online, right? Where it's just fake money, but it's the real stock market. So you can just do that and see if you like, so you won't lose or gain any money, right?
Mhm.
So it's not risky at all, and you can see if you know what you're doing. That's how I started out, at least. And I was like, oh, I kind of get it, so I'm gonna move on to real money.
Nice.
Yeah.
Good job.
Yeah.
Thank you. Yeah. No more questions.